Hello, I'm Vadini Aryam. In this video, I'm going to talk about the background of accounting and accountants. Accounting is an integral part of a business. Some entrepreneurs try to do the accounting themselves, but they think it's easy or just a recording and bookkeeping is accounting. It's not like that. When their business grow, accounting becomes more complicated and they find it difficult. Then they think of hiring an accountant. But if they don't do that, hiring an accountant and give the accountant to sort out all the accounting procedures and implement the correct system. If they don't do that, and if it goes beyond some extent, they will be facing more problems, and at the end it will lead to the path of failure. So accounting is an important part of a business, so they have to be careful when you are starting the business. Obviously you are looking for customers, looking for goods, looking for location and things like that. At the same time, on the back of your mind, you have to think about the accounting as well. As soon as you start your business, you have to implement a system. Otherwise, you do not want anything to get accumulated and give you more headaches and problems. Let me look at some accounting procedures. Most people are interested in accounting, not interested in accounting, and because they believe it's for the people who are good with figures. They also think it's a concept of recording and bookkeeping. That is why they ignore that at the start of a business. Accounting is much broader than that. It helps to determine the financial status of the company. After that, proceeds to assess the future of the company regarding the financial condition of the company. How is the financial situation going to be in the future? You can use accounting records and accounting figures, extracted figures to assess that. If the accounting procedure is not appropriately done, the entrepreneur get confused about the progress of the business and decision-making process. And if you are not sure of the figures, if you are not calculated the profit and loss account, for example, you cannot make any decision, and for the future, that will stop you from making any decisions because you don't know the figures, you don't know where you are and how you are doing with the business. If the accounting systems implemented in the preparation of account and financial reports to access the monetary value of the company. You should know the value of the company. If you want to know the value of the company, you have to have accounting systems. Therefore, a business should have proper accounting procedures to stop that from failing. Who will see the accounting information? Who will want to see the accounting information? Individuals who are self-employed, they need to have the accounting systems implemented properly. Business owners, lenders, if you want to borrow money from the bank or any lender, they will want to see the figures. Potential buyer, if you have been running the business for a while and you want to change and you want to sell the business and you want to get a new one, so your potential buyer will want to look at your books. Tax office, obviously you have to pay the tax, so the tax office will want to see that. In the case of inspection, they will want to see all your records and the accounting work. Government agencies and labor unions. The services performed by accountants are, there is no limit to the work of an accountant to do for a company. The vital factor is to maintain and implement the proper accounting system for the survival of the company. That is the vital part. So they have to make sure the company is running smoothly and it will survive and it will grow as well. That is the main job of an accountant. Private company accountants. The private company accountants exercise internal control to make sure all the figures are done, all the figures are calculated properly, and all the recordings are done, all the ledgers are maintained, so that they can start with the year-end process. The year-end process, they will do the management accounting, cost accounting, financial reports, financial accounting, to help it in order to help the management to make decisions. Then they have to produce all those figures to the management to make the decision. Management means the directors of the company. They create budgets, cash flow. Once the accounting work has been done for the year end, they will, depending on those figures, they will set the budgets and cash flows for the financial next year. And also they will work with the auditor. The accountants will work with the auditors to get the accounts approved by the auditors. An accountant will advise company directors about the changes for the business with the use of the business plan. And also they will advise, because the owners might not know about the business plan, even though they should have had a business plan when they started the business. But at least now the accountant will advise the owners to have a business plan. So all these figures will be used to create a business plan. That will help these are all the responsibilities of the accountant in preparing the business plan. In addition, preparing the business plan also for the company. Public sector accountants, the government office accountants, they serve the public, and they are specialists in tax advice, auditing, management consulting, also things they are specialized. What is the difference between management and financial accounting? Financial accounting is preparation of the financial figures for the company for a period of financial period. They prepare the accounts, the profit and loss account, balance sheet, cash flows, budgets, and all those. It's done by a financial accountant. The financial accountant is responsible to produce accurate figures for the company, so that the lenders can see the figures. If you are looking for potential investors, the financial accountant will have to produce all those figures, accurate figures, to the potential buyers or potential investors. They will want to see the figures. Without those figures, nobody will like to invest in your in your company. Whereas management accountants, they will use all these figures. They will take all these figures, collect all these figures from the financial accountant and the cost accountant, and they will summarize all this, and they will make the financial decisions for the future. And they will get along with the directors, the owners of the company, in making those decisions, collect the information from the other accounting, financial and cost accounting, to analyze. That helps in making the predictions for the future prospects. So that management accountant will help the management, the directors, the owners of the company, to make the predictions for the better prospects. That is for the better in the future. That's for the future the next financial year maybe. So these are the things the accountants will do for a company. Accounting, other than that, accounting is a vital part of the company. Do not neglect, as if you are a business person, do not neglect the accounts, because it will drag you down. And also, it will not, if you are a startup, if you haven't done the accounts, you will not be able to take the business off the ground. This is my advice about accounting. I hope you like this video. If you like it, please share it. And thank you for watching my video. I will see you in another one. Thank you. Bye for now.